Galaxy Rap Studio Productions. Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. We're so back and we always flow fat, and know that I'm never soft when I rock comfort like an old pillow. Stay humble, stack sats, yo, close Zillow. In the street or on the beat, I'm always focused. My money is magic, Bitcoin is hocus pocus. My team's relentless, no we swarm like locusts. Catch me in the lab cooking up all sorts of potions. Ain't a hater in the world with the skill to damage me. Leave you nauseous, taking Dramamine like the Bankman Frieds. If bears want insanity or they try to handle me, mess around and hit him with the super gamma squeeze. Candles greener than the trees, so blessed. Hand out the window in the breeze, no stress. Man in the middle when I write always. Yo, I'm handling riddles with a mic all day on Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. Christine Kim from Galaxy Research, she's going to join us to talk about the modularity thesis to scaling blockchains and what it means for the world of blockchains. She has a great report out, and we'll get into it with her. We'll also check in with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk about markets and macro. And before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Phineas, Sam Bankman-Fried is supposedly going to testify in his own defense at the trial. What do we think about this?
Another week, more Sam Bankman-Fried news. We can't get enough. What are your thoughts?
I mean, can he possibly get away with not testifying from what we were, I mean, look, we're just observers, but it looks pretty bad for him. Feels like he's got to throw a grenade in there and try to change the narrative.
Well, typically it is a big no-no.
Yeah, very bad idea, right? Usually.
Because it's...
you could blow the whole case.
You never know what's going to happen.
Right. But I feel like he's down bad, so you got to... It's like a Hail Mary.
It's a Hail Mary.
Yeah.
Yeah, it's a Hail Mary.
Yeah, and big Bitcoin market moves this week as people really anticipate the ETF. It's been wild.
It seems like we have to give you your flowers a little bit here. I don't want to, blow up your spot too much, but I saw your tweet on Sunday, and then the market moved Monday.
Yeah,
pretty in line with your prediction, and you're not a big predictor necessarily. That's not what you're paid to do. But
yeah, we don't spend too much time dealing and talking about short-term price predictions. But the options market was flashing these signals that we wrote about and I tweeted about on Sunday. And yeah, I mean, it played out basically as expected. That's the gamma squeeze, right? Which was the dealers on a net basis were very short gamma and short upside, and so as price bled higher on anticipation of the ETF on Sunday and Monday, it started to take out these levels where people had to buy spot Bitcoin. Dealers had to buy back a lot of spot Bitcoin to stay delta neutral, which really is what caused explosiveness. And I should point out, I mean, this is something we've been talking about, right? 2 weeks ago, we had Kelly Greer from Galaxy Trading on the podcast to talk specifically about the dealer positioning in the options market. And that podcast was titled Bitcoin or Options Market Suggests Big Move. Could Bitcoin Options Market suggest big move ahead?
Yeah.
Right? So we've been talking about it. It did play out. I mean, and now we see, I mean, you can see over my shoulder with the block clock, right? I mean, we're doing great here. I mean, Bitcoin's up over 110% year to date. And
now we have Beimnet back on the show today to talk about markets again and follow up. And I think
we continue to hammer this home.
Yeah, I mean, it's a market that moves all the time, and it's cool to have people that are paying such close attention to it on the show every week.
So we'll follow up next week. I don't know when Sam's going to testify, and I don't know for certain, but I saw a headline that he will testify. That will be among the most watched court appearances, I think, in recent memory, and we'll tell you what happened once it does. But for now, let's get right into the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, thanks for coming on Galaxy Brains.
Thanks for having me.
What a week. I mean, we're seeing material movement in Bitcoin. You can see over my shoulder, right now as we record on Wednesday, it's $34,700-ish is the...
Closer to 800, but who's counting?
Yeah, I mean, it's... and we had a material, huge move earlier in the week.
Absolutely.
What do you make of this apparent renewed optimism?
I think it's entirely warranted, heading into a catalyst that is highly probable. It was driven by a number of things, but one of the main things was a short squeeze, particularly in the option side of things. The street was generally positioned pretty short gamma into this break. In addition, you had a ton of folks shorting Bitcoin at the yearly highs, and a ton of OI ended up getting wiped out on the perps. And folks, saw the technical break, right? 32K was, year-to-date highs. We broke through it pretty easily. The 200-day moving average that was previously resistance held as support, and now we're, once you were above 32K, you're above every relevant moving average and technical average you could think of, and so you had a technical breakthrough, a short gamma squeeze, a short positioning squeeze as well. On top of that, the put folks that got absolutely blasted. And all of those factors, coming together, and now the question is, can we continue? And my opinion is an unequivocal yes. I think very few folks, anecdotally, have caught this move, especially in the traditional community. It's a rally that is under-owned, under-positioned, and so I think every 100 points higher is a lot more painful than every 100 points lower.
Yeah. This is a 20% move from the range we were in just last week.
But when you have Larry Fink coming on television and telling you he thinks about it as a safe haven.
Right. A flight to quality.
A flight to quality. Yeah. Like, the world has changed. The beauty about an institution like BlackRock or these TradFi institutions is that they institutionalize an asset.
By definition.
By definition. Yeah. They give it credence. And so it's not that Bitcoin wasn't institutional before, but when Larry Fink, puts the BlackRock stamp on it, it's different. Yeah. And it is different this time. And so what have we known always to be true? The liquidity available versus the
potential demand.
But the potential demand, there's a huge imbalance.
Yeah.
And I think we're just getting a taste of that. And this could be, again, another Minsky moment for markets. And where all of a sudden people realize, oh, wait, we have this new asset. It has a role in investment portfolios, and we can't ignore it now because every other institution's looking at it.
Right.
And then here's the beauty about this is that it becomes so self-fulfilling. There's such a positive feedback loop to positive price action at the moment, right? Every % higher, it becomes, one of the better asset classes performance this year. It gets better on a risk-adjusted basis. The story, the thesis gets more credence.
Yeah.
And so you have this convexity of opinion that isn't, price-based, but it's thought-based.
Right.
And so that's where you are in the market, and that's what these technical breaks are telling you, that when you're above a 200-week moving average or day moving average, it tells you there's a change in the trend.
Yep.
And we know why.
Right.
And so how do you trade things? You buy things going into a known catalyst.
Yep. Yeah.
And that is what TradFi is, I believe, going to do.
Yeah, and we've seen continued strength. It wasn't just the gamma squeeze or the technicals either, right? To your point, it's this catalyst that people are really waking up to. Even, we had a pullback after Monday's incredible rally. A minor one, and we're already back right where we were. Right?
Absolutely.
And it wasn't a big. I think I saw it go as low as 33 at some point on Tuesday. Still, obviously, way above where it was.
Yeah, after it broke 32, the low was like 32.7.
Yeah, you can exactly you can see, and if you just watch, it's just marching up. So there's clearly a lot of demand out there. To your point on returns, I think at this level, Bitcoin's up 110% this year total return.
Math every moment.
I know, it's just keep going up. It is basically the best performing asset of the year. I'm not going to mention that. I did find two equities in the U.S., which we won't talk about, but that are slightly better. But those are individual companies. This is a giant global asset. Yeah. Now we should say, I guess, in your mind, what could harm, even leading into ETF approval over the next couple months? What could make us bearish on Bitcoin, or what could impact it negatively in your mind?
Well, I think a broader risk-off move in markets.
Yeah.
If 10s start taking out 5% and the curve starts steepening like crazy again, I think you'll see a continuation of the risk-off move that you've seen in the NASDAQ and the S&P. Everybody being like, oh, inflation's still a huge issue. QT is leading to bonds that have no bid and stuff. So you could go down that spiral of thinking,
right?
For sure. In addition, you could have things like gold trade down because all of a sudden there's peace in Israel or or
Right.
the ceasefire or
Changes,
that situation.
or even the reverse. Like even if I was going to say if we have increased geopolitical conflict and the world doesn't yet treat Bitcoin as a flight to quality.
Yeah.
Right.
Right now, it's got a weird hybrid, but ultimately, like everybody is thinking that there is going to be a God candle when an ETF is approved.
Right. So it's about positioning ahead of that.
Yeah. And so, folks are trying to pick their levels, buy dips, but basically you might have only between now and the ETF approval, might be your last
within
chance
a month and a half
to
or
get,
so, right?
To get possible. It before that said candle, potentially.
Potentially, right. I agree. And we put out a report. Chuck, Charles Yu on my team put out a report yesterday on Tuesday estimating really, I think, a very defensible and conservative estimate on the potential inflows to generic Bitcoin ETFs and its impact on price. And I mean, I think we think it could be big. I mean, go check out the reports on our website, but without getting into it. So I think there is plenty of reason to believe, I believe, that there will be significant interest in the ETF. I think some people, it's interesting, the responses to that report were either you're overestimating or underestimating, right? Like people either think like, well, why would you buy it? Like you could already buy it on Coinbase or wherever else, right? Like why would you need the ETF? Or there's these other products already in the market. And it's like, well, the channel that has $47 trillion doesn't have access to those products, right? And so that's why we think it could be big. On the other hand, people are like, oh, it's too small. I think we said 15 billion in inflows in year 1 and 38 in year 3. And people are like, it's going to be up 100 billion, right? And there's really no way to know. We're just triangulating. But in any case, we see significant interest, I think, in demand. And obviously the market's anticipating it.
Yeah. No, the long run, how much inflows it gets or not, it's going to be tough to ballpark. But again, we go back to the main points. We know that the American capital market's the best capital market ever in history. ETFs, the best product ever to
trade on them.
To trade. And so, like, I'm convinced that we have the recipe for, a pretty aggressive price movement, whether it's short term or long term. I think it's, it doesn't matter. But for the big picture, like, is it too early to declare victory? Probably. I want to do like a George Bush 04, like in front of
mission accomplished.
Mission accomplished moment, but without getting the approval. But if you do get it, it's just monumental.
I want to point out, I think you literally raised the bit signal.
I did
on this podcast 2 weeks ago.
Yeah. I mean,
you said I'm saying it here. I'm raising the bit signal.
Yeah, I just got to.
You got the spidey sense.
I had the spidey sense on the Bitcoin, but it's also just the general level of frustration with central bankers and monetary policy. You consistently see these central bankers being asked about the fiscal situation.
They refuse to speak on it, right?
They refuse. Well, they speak on it in a way that avoids the main question. They're like, well, our job is to respond to fiscal policy, right? Is what they say, and because that's not their mandate,
right?
But ultimately, like, we're in a situation where we run $1.7 trillion in deficit. We have congressional leaders that are they actually can't
form a government at the moment.
They can't.
Effectively.
And like you're paying a level of interest that's right now like just insane. It's similar to like spending on defense, like 15% of the budget on interest, and it's only compounding over time.
Right.
This country is addicted to spending money it doesn't have.
Yeah.
And there's no politicians that are like, well, there are a few, but it doesn't look like a situation that's going to be addressed politically, and therefore these central bankers need to properly talk about that and address that and that reality, but they choose not to. And in the face of just mounting and surging treasury supply, and they're not even buying it. And so it's like, do you acknowledge that you got to buy all this paper and do MMT forever and yield curve control? No, because that tells people that you have no control over the fiscal, and that should in theory debase your currency.
Even Jamie Dimon, I think yesterday had a big quote about this, about how if you look at the recent history of the Fed, you should really not trust what they're saying about the future.
No, absolutely not.
Because they did such a bad
job. Their forecasting is so bad. I mean, it's just been so politically unacceptable to criticize the Fed, but Jamie Dimon can do it now because one, he's the biggest bank and he saved them on whatever that bank that they bought was. But they need him now because
Yeah.
all of the regional banks are in shit.
Yeah.
And like the only reason that we didn't have a huge banking crisis is because we spun up some random facility to give banks loans,
Which was
at
effectively
really
fake
favorable
money, right? I mean, or free money.
it's just expanding your balance sheet.
yeah.
It was literally like doing more QE.
Yeah.
From a
Just for
technical
banks.
perspective.
Just for banks when they need
at
help.
these great terms where you can borrow at par on something that's worth 50
effectively
cents.
marked down. Yeah.
Right? And so, it's just like every solution that we have to monetary policy and market incidents is print more money, lend more money,
right.
lend more dollars in swap lines. I will give you financing versus this. And so if the entire premise of our monetary system is built on the ability to print more money, that's not a foundation that makes me comfortable. And it becomes ever present like when central bankers keep getting asked about it and they can't acknowledge the simple facts of like their monetary policy is going to be entirely driven by fiscal dominance. And so anyway, I could rant on this.
That is our man, Beimnet Abebe. I love it. I love the rant. Beimnet Abebe from Galaxy Trading. Thank you so much, as always.
Pleasure.
Welcome, Christine Kim from Galaxy Research, my friend. Welcome back to Galaxy Brains.
Thanks for having me, Alex.
Always great to have you on. And, I wanted to have you on, as I often do, but in particular this reason, because you just published a great report about modularity, right? I think you said, was it called Scaling Blockchains, the Modularity Thesis? This is so hot right now, modularity, right? And
Yeah.
So, and I want to talk about the report because it's I would say it's a pretty important report from our team. And it, in some ways, is a follow-up to the Ready Layer 1 report that we published in November 2021. That report, I'm going to set the stage a little bit, and then I'm going to ask you what is modularity. But that report in 21 sort of elucidated our thesis at the time that outside of Bitcoin, there was this battle among general computation blockchains, and we effectively argued that it was Ethereum's game to lose. So that report, we talked about Ethereum and 10 competitors. It really looks today like most of those competitors aren't very competitive to Ethereum, and that maybe Ethereum is now winning, and modularity plays a big role in that, and that's, I think, why these two reports are very nice to go together. Tell us, though, what is modularity? What is it?
Well, I think modularity is a little bit of like the big buzzword in crypto. It represents kind of like a real shift in thinking of how we scale blockchains. If we think about how blockchains tried to scale, or how many blockchain developers tried to think about scaling blockchains before the modularity thesis, before modularity even became a term, we were thinking about layered scaling approaches where,
Right.
On Bitcoin, if you think about it, how do we get faster transactions? Let's get a protocol built on top of Bitcoin that settles to Bitcoin but doesn't actually execute every single transaction
Right.
on Bitcoin. And so that, I think, was really how the modularity thesis continued to develop out from. The difference, though, with the modularity thesis is that with layered scaling approaches, you have these solutions on top of a blockchain that still allows the execution of transactions. It still allows all of the core functions of a blockchain, which is transaction execution, settlement of transactions, consensus, and a blockchain trying to fulfill all of those functions will inherently be bogged down with just too many responsibilities. Over time, you're going to find that the computational resources that your nodes need in order to support even all those layers will continue to increase and grow and become more centralized over time. So the modularity thesis is, why don't we cut out these various functions from the core, from the very protocol layer, from the very base layer. Let's just create a blockchain that only is able to do, say, like 2 out of 4 core functions: consensus and data availability, which is the model that Celestia is going for, and is really the main focus of the modularity reports, the Celestia blockchain, and is actually the approach that I think Ethereum developers are trying to trend towards as well.
Yeah, so this would be the new long-term plan, although to the extent there is one, certainly the direction of scaling Ethereum.
Yeah, I mean, that is what one part of Ethereum developers are thinking about. But the other part of Ethereum developers, which is really interesting from the last couple call notes that I have out from the developer calls, is that for the next upgrade after Cancun Deneb, there's a big push for upgrading the EVM. The EVM is Ethereum's
interesting.
execution engine, and there's an upgrade called the EOF upgrade, which is the Ethereum object format, and it basically helps the EVM distinguish between transactions that are trying to execute smart contract code versus storing data about smart contracts and the applications that are on top of Ethereum. And so there is this push to, make Ethereum a better protocol layer for executing transactions. But there's another, like we were just talking
That plays
about.
into the modularity thesis too, though, right? Is that we think, or I guess, do you think in the end, and I don't want to distract too much here, but like, is execution going to be happening on Ethereum, or will it be happening elsewhere? You think, like on a modular layer, or like, how does that play out? I mean, obviously, plenty of execution will still happen on Ethereum, so it matters. But
In the short term, right now, all of the execution is happening on Ethereum. Only about, 10% of gas consumption is from layer 2s.
Right.
But with the subsidization of layer 2 rollups with proto-dank sharding upgrade, which will make rollups a heck of a lot cheaper on Ethereum, I think there's these upgrades that are trying to push user activity to layer 2s. But at the same time, you've got developers talking about EOF upgrades, which are upgrades that are going to try and make transaction execution easier and more efficient on Ethereum. That kind of seems competing between these two. And I think it really reflects the fact that, look, the layer 2 ecosystem is not fully mature. And so for Ethereum to be kind of putting all of their eggs in one basket, so to speak, it's a little bit too nascent for that. And I actually think it's a smart idea to continue to develop Ethereum's execution layer and not bet all in on layer 2s just yet. See how the modularity blockchain thesis pans out. And if it really is, that is the way that blockchains scale, then, continue to move forward with things like full dank sharding.
Right, stuff to support that thesis, rather than perhaps like upgrading the L1's capabilities on a standalone basis for stuff that, right, if it works. If it looks like it's working, then you expect the development will really move much more to supporting whatever these modular layers need, more than, say, upgrading the EVM.
Yeah, I think so. And I think Ethereum right now is kind of like has its foot in one bucket and the other. It's in this awkward phase where Ethereum is not fully, like Celestia, going all in on the blockchain modularity thesis, but it's also not fully on the monolithic side where it's like, we're just going to double down on like making sure that we are both a really performant execution layer and, data availability layer and all of the other core functions of a blockchain. And I think this really comes down to competition. When we're thinking about the Ready Layer 1 thesis of is it Ethereum's game to lose, I think Ethereum is really kind of weighing what new competitors are coming up. And I think Celestia is an example of a different competitor to all of its other alt layer 1 competitors, because it is uniquely kind of designed to be highly optimized as a DA layer only, and highly optimized for supporting rollups, whereas Ethereum is not fully quite there yet.
Interesting. Let's talk about Celestia a little bit more, because I want to understand this, how it works. So when you talk about data availability, what data are we talking about? Is it the transaction history data, basically, or transaction data?
Yeah. So every time a user sends a transactions, I want to send, a certain amount of this token to you. You can execute that individually on the base layer of a blockchain.
Yep.
But there is quite a lot of scalability gains from compressing these transactions down and bundling them together and just sending them through.
And this is what like rollups and stuff do anyway. But when we talk about like an Arbitrum or Optimism rollup today, or an optimistic rollup or whatever, the ones we have today, they're doing execution there, right? They're ordering the transactions, right? There's which is what the sequencer does or whatever. But then they're rolling them up, and I don't know what exact cryptography we're using now, but it's like, think of it like a Merkle tree, right? Like it's a hash of hashes and type of stuff, and it's all in there. And then they're posting that to the L1, right? But like, where is the data? What does the data availability mean when like what is the data that we're talking about? Is it the hashes is it the transaction data specifically? Like when we move, like what is Celestia going to have on it, right? If it's only data availability, like will Ethereum or like other rollups, will they like look at the data on Celestia and like refer to it? Like how does that, have we even seen yet how it's going to come together?
I think there's still a lot of questions about how it's going to all come together. With Celestia, I think it's really about trying to generate the proofs, trying to be able to prove that this data was on chain at some point, that the user transactions did exist, that they were committed down. One of the core differences, though, between what Celestia is doing and what Ethereum rollups do, like Arbitrum and Optimism, is that Celestia doesn't necessarily have to offer anything around settling the order of transactions. So like for Ethereum, if perchance, like a user on Optimism or Arbitrum wants to execute a transaction on Optimism or Arbitrum, but do so directly by interacting with the smart contract on the Ethereum level, they can. They can interact with the smart contract on Ethereum and have their transaction executed on any of those rollups, right? And so that's like a settlement function that the Celestia blockchain will not be necessarily supporting. So that's one kind of key difference about what type of data we're talking about.
Interesting.
And what type of data users can actually interact with.
It's going to be really, this is the first,
layers.
this is the first test case for the thesis, right? Like this is the first thing that's going to go into production that actually does modularity, quote unquote, right?
Yeah.
Do you think about like, I like how you described at the beginning of how modularity is kind of an evolution of the layered scaling thesis, because like, should we, when we say the modularity thesis, when we say it, I don't think other people are really saying it this way, but when we say it, we really do include like the Lightning Network or these other rollups or side chains, right? They're all kind of, even if the layer that we're talking about actually does all four of the things, like a side chain typically does, right? It's sort of just arbitrary. Like they could have done 3 of the 4, and that would definitely be what people are calling modularity. But is that how to think about it? Like it's sort of just, it is layers. It's just instead of building an entirely full protocol on top of another protocol, it may be taking the pieces, some pieces of a protocol.
Yeah, it's honestly, I think it's a semantics debate. I mean, everyone, even
I'm in it. I want to be in it. I'm just telling everyone modularity includes layered scaling.
And I think it really depends on how honestly, when you entered into the crypto industry space, because I think when you think about how to scale blockchains, you think about the amount of transactions that are being processed on a single chain. Sharding, the idea of sharding, which came before the modularity thesis, is simply, well, why don't we just like split apart all that transaction load and divide it among, several mini blockchains? It's very natural to try and think of like, well, why don't we just push off certain transaction loads to other layers, which is where I think we get the layered scaling approach and we get things like sharding and all these other concepts. And I think modularity is one of those concepts. But modularity specifically, the way I differentiate it from other layered scaling approaches is that from basically the protocol layer up, no single layer is fully monolithic.
So interesting. So like you end up needing, if you're a blockchain analyst or, well, we'll stick with that. If you end up needing to look in a future where this is widely adopted and this is sort of how the Ethereum ecosystem goes, you end up having to refer to a bunch of different places to sort of reconstruct or understand the total use of Ethereum, right? Like it's not just Ethereum anymore. It already isn't. To your point about rollups using 10% of gas today, like you can't just look at Ethereum. You got to look at the rollups. But like paint for me the picture of what future, let's just pick 5 years and we assume, because maybe it'll take that long, even if the modularity thesis plays out fully. When you open up your wallet, like what are you probably connecting to? Not the L1?
No, definitely not. I think the layer one, all of the layer one protocols, all of the data availability layers become so obfuscated, like so kind of like
like hidden, but built back. It's like back office
end,
stuff.
Yeah.
And
I think you start to get a lot of third-party intermediaries in between the actual user interface that users are interacting with. You'll have, it's going to get very complex. So what you'll have is like the Celestia data availability layer, super optimized just to receive batches of proofs of batches of transactions from layer 2 rollups.
Mm-hmm.
You have all these layer 2 rollups that are highly optimized and just settling user transactions, ordering them, compressing them down with ZK, zero knowledge technology. And then maybe you have a layer 3 on top of layer 2s.
Wow.
Where instead of having like a generalized execution layer, you have specific you have specific networks for a particular application, so that if an application becomes very highly used, it doesn't overflow and congest, the rest of the layer 2 network.
So interesting.
And then on top of layer 2s, you have the front end of what users might be interacting with. And so I think the ecosystem starts to get more complex. And in this entire picture, you have to ask yourself, where is the interoperability between all of these layers? Where does the MEV sit? And I think that is really the weakest link that I see in this blockchain modularity thesis. The reason why it might not turn out is because Ethereum's dominance is because it has the most liquidity, it has the most interoperability between applications, and if we fragment that because of the modularity thesis, and there are no solutions to really kind of bring that layered ecosystem together, then I think that's where the modularity thesis fails, and that's where we collapse back into a monolithic chain, and that's where high costs are kind of a necessary byproduct to having security and to deploying your apps.
Really interesting. I feel like that is a huge question, right? And because that's where it could work technologically, but be bad for the overall ecosystem, right?
Right.
Like they could solve they all connect. Let's say they do all connect in some way, but it's like, can the users, the transactions, the capital actually freely flow, right? Is it really composable in one space conceptually, right? And if it's not, for example, the simplest answer to your point about liquidity is DeFi, right?
Exactly.
Even now, and it'd be interesting, we should look at this. There is, there's some DeFi on the roll-ups and whatnot. There's pools and AMMs and whatnot. I'm sure they're not as deeply liquid as on the L1. And what would it take for them to be, right? And you just, in general, capital likes liquidity. It flows to liquidity, right? It's why the U.S. capital markets, right? It's got great property rights, efficient markets, nice regulations, blah, blah, blah. So it flows here, right? It doesn't want to be in multiple different places. That's super interesting because I feel like, are the developers sort of really thinking about that? Because I could see this becoming the type of thing where the technologists, they try to solve the technology problem, but actually there's a usability question and a capital question that maybe some technologists might not fully grasp. It's sort of like you can do it, but should you do it?
Right. I think this is actually the biggest question that developers in the Celestia ecosystem are trying to solve. They're thinking about, unified settlement layers, unified sequencers, unified everything to try and solve this issue of usability and interoperability between the layers. But I think it's going to take years to really fully solve. So until we get there, I think there is still a very large value to having everything on a monolithic chain. And the question is, will we ever really get there? Will the efficiency of, and the liquidity of a DeFi ecosystem built on top of a monolithic chain ever, compete with that of what's on a modular chain? And that's really how we need to think and measure kind of the success of Celestia. Look at the DeFi ecosystem built in the Celestia ecosystem and see how efficiently, securely that capital moves around.
It's so interesting too, because this is the sort of one of the only other chains that we really think we see use on is Solana, and it takes a drastically different approach, right? Which is monolithic first, scale with hardware, et cetera. And when I'm having this vision, I think it's from the movie The Watchmen or the comic books, but there's the Ethereum developers, you start from a centralized world. They build a decentralized thing, right? And then now they're just exploding it apart and putting it back together and exploding it apart and I don't mean destructively. I mean disaggregating all the pieces and saying, where can we optimize? And then now you're talking about unified settlement. It's kind of well, wait, can we take the disaggregated pieces and bring them back together? And it's like a jigsaw puzzle. They're constantly trying different ways to arrange it. And can it be more efficient in this new configuration? Do you have, I'm sure you do and have thought about it, but what about decentralization in this world? Does modularity, we think, could it make decentralization better? Some of these are going to have their own consensus, right? So it's sort of they're not relying on Ethereum. Other ones won't have their own consensus, right? So then they rely on Ethereum. Like, how do you is there a risk that as they blow it apart into modules, but then look for ways to make it interlock? Like, how do you think about decentralization in a modular world? Is there any? I mean, this is sort of a loaded question because I know we don't really know yet.
No, it's a really great question. And I think by introducing more layers and settlement schemes in between the protocols, you necessarily lose out on decentralization because you're fragmenting the number of users, the number of security providers across each layer instead of aggregating them to one layer. And I think this idea of layered scaling approaches, when you really think of why it is that we would want to build on top of, say, Ethereum rather than Celestia, it's because of decentralization. It's because of the gains of the fact that, Ethereum is the most decentralized general purpose blockchain in the world. But I think you start to obfuscate from all of the benefits of that if users are paying in fiat and stable coins and having the roll-up kind of automatically exchange these fiats and stable coins and tokens on behalf of the users and then batch all of these transactions down to Ethereum, as in the only customers of the Ethereum blockchain are really these roll-ups, these centralized companies that are the primary holders of ETH, primary revenue generators of Ethereum. I think you can get to a future where decentralization is where the future starts to look actually very similar to what we have today, as opposed to the future, the decentralized future that we might have thought of when we first considered Web3, of every single user operating their own node, every single user being able to send their own transactions directly from the layer one.
Is this where and maybe it's clicking for me because I get most of my information about the Ethereum world from you, and is this something where IGEN Layer comes in and helps the restaking concept, which is if we're having all these different places where stuff happens and they all have their own security, isn't that part of the IGEN Layer thesis is maybe we can make it easier for all those other places to use Ethereum security? Is that kind of the idea?
Well, I think the modularity thesis doesn't work if you don't have restaking.
Got it.
Because you have to, if you're securing, say, the protocol layer, the base layer, and you envision a world where the protocol layer doesn't do everything, you necessarily need all these other layers. How are you going to secure those layers with the same kind of economic security that you have on the protocol layer?
Yeah, you can't start with a whole new validator set and
exactly. You need restaking. And so I think IGEN Layer represents, a very core part of the modularity thesis that's necessary to uphold this vision of a secure modular blockchain. And I think even that is still in its very experimental phases. I think IGEN Layer is launching in tranches, and we've yet to see an actively validated set from IGEN Layer really take off. So a lot of the modularity thesis is very nascent, I will say.
This is fascinating because one way or another, I mean, this is scaling blockchains is a decades-old question at this point, right? I mean, I think back to the Bitcoin block size wars. We've got Johnny Beer's book up here, which is a great book, by the way. I always show this book. It's, I think, one of the most exciting and interesting books about Bitcoin, and also, of course, Bitcoin's history is blockchain's history. And the debate was, well, we want to scale Bitcoin. There, a bunch of merchants and others wanted to make it better for payments, right? I said it's too expensive. The block space is too scarce. We should add block space to reduce fee pressure, and that would enable micropayments, right? And that's, of course, the Bitcoin blockchain went a little bit of a different way, but it has effectively increased the block size over time. Mm-hmm. But that's a pretty blunt object, right? Let's just double the block. It's let's just raise the gas limit, right? And I've heard you say this. They've already raised the gas limit a bajillion times on ETH, right? It's pretty high, right, at this point. So there's plenty. Well, I don't know if there's not plenty, but there's just simply increasing the block size isn't enough because it puts all burdens on nodes. In the end, it can really only do it so much, right? You have supporters of a Bitcoin fork that I won't mention have argued that you could have gigabyte-sized blocks. That would be fine, they say. Well, it's not fine because there are latency issues. You can't download a gigabyte and that quickly, right? So that causes node centralization, also the costs to the nodes to store all that data. So this really is that same story reimagined again, a better, newer way, they think, of scaling the blockchain.
Well,
Yeah.
to that point, that issue of, you have to continually increase the block size, one of the core kind of technologies that is often talked about when we talk about the modularity thesis is the data availability sampling solution. So instead of basically increasing the block size, you allow nodes to sample data within a block. So
Rather than store it all.
Yeah, and so instead of having to validate the entirety of a block, you could have, a very large amount of data and nodes sampling, say, like
I forget
only 10%.
Yeah, you had the math
block.
in the paper, but it's like a very small amount. You can actually get to like 99.999% certainty that the whole block is good.
Exactly. The
just by
mathematical
sampling a couple
probability.
percent of it. It's
Exactly.
really interesting.
But that only works if the point of the protocol is to be a data availability layer.
And store the data. It has to be there.
Right. Yeah. Temporarily store the data.
So that we can look at it and sample it.
And say that this is verified data. However, if you're trying to make a protocol that also executes transactions, say, has an EVM, that's where I think you start to get bogged down with like, okay, then do we actually have to increase the block sizes and all this stuff? But if you can make your layer as efficient of a data availability layer as possible, you can utilize these solutions like data availability sampling that does allow anybody to be able to run a node on even like your smartphone.
Yeah, because they don't actually have to store it all. They just have to periodically sample some, verify it. Then I guess like you store like the blockchain they're storing is some like what we call like a light node. It stores a series of hashes, not rather than all the data, right? Because they know that the data was valid and validated.
Yes, and if you have that kind of core decentralized layer for a data availability layer, you can have, say, more centralization on layer 2s and layer 3s, but at least the very foundation of where all that data is being verified and validated is as decentralized as possible. And so I think that's where you start to trend towards a future where you can really have a secure, decentralized, modular blockchain. But
there's a lot of pieces.
There's a lot of pieces to that.
Yeah, we're going to be following it. Before we wrap, what else are you looking at in the Ethereum world? You mentioned the stuff for the next upgrades. When do we expect at this point the Cancun Deneb upgrade, by the way?
Well, my projection...
This has proto-dank sharding 4844.
Yes.
Yeah.
Yes, 4844 Cancun Deneb. My projection is early next year. The way that testing is going, the way that developers are still identifying new bugs in the software really just highlight that they're not ready yet to be launching this upgrade on existing public Ethereum testnets, and they're going to have to get through that. I think they'll need at least a month to upgrade to.
And that puts us into the holiday season.
Yeah.
So they don't like to, right? Like fall and spring are typically like upgrade season. They don't like they don't like the holidays. There was one. Was it like it might have been like 5 years ago at this point, 4 years ago. They did an upgrade on like right around New Year's, and there was a bug, and so they had to do a quick like like a hotfix patch upgrade, which was fine, but it was like during New Year's, like it was like on January 1st or something. Literally, like people around the world were partying, including I mean, everyone celebrates January 1, right? Like they always show if you stay up and watch TV, like they show every single time zone celebrating it. And I remember that was like, I think they learned they don't want to do any upgrades around that time because if anything happens, like people are literally like with their families and stuff.
Yeah.
So that's contributing to it also, right? I mean, if they finish in a month, like why wouldn't they launch it in December? It's probably for this reason.
Yeah, I mean, open source development, especially for Ethereum, is a full-time job. No, I mean, as much as possible, we don't want developers to be executing upgrades on holidays, weekends, or like late into the night.
Right.
I will say, though, the merge was a unique kind of example of an upgrade that
People
went
were
live.
driving to it. It was like, we got to get this done.
At like 4 a.m. at night. But again, and I will say one other thing outside of the Cancun Deneb upgrade that I hope people really pay attention to now is what's going into the upgrade afterwards. So there's a report that I've written about, how we're going to have to address the validator set size growth. But in addition to that, there's a lot of questions around, okay, do we focus the next upgrade on upgrading the EVM, or do we focus the upgrade on, upgrading Ethereum's, data storage models and moving towards, say, like a Verkle type data proof system versus Merkle trees.
I don't even. You're gonna tell us on a different show what Merkle trees are. I'm gonna ask later, but I love it.
But these kinds of questions, it's a lot of politics. It's not even. It's going away from really like the technical merit of these upgrades and thinking about what's most important to
What's the
Ethereum.
priority?
Yes.
Yeah, we'll get into that. That's really interesting. So we don't know yet. There's a couple things on the table.
A couple things on the table, and already we're starting to see these discussions spring on the ACD calls.
So some jockeying around what's
Yes.
like. It's gonna be interesting. So. Hey, if you don't follow Christine's work, she publishes notes every week on Ethereum development, and it's quite good. So make sure you check that out. And check out the report, Scaling Blockchains, the Modularity Thesis. It's on our website, galaxy.com/research. Christine, my friend, thank you so much for coming on Galaxy Brains, as always.
Thanks for having me, Alex.
That's it for this week's episode of Galaxy Brains. Thanks to our guest Christine Kim from Galaxy Research and Beimnet Abebe from Galaxy Trading, as always. Lots of exciting stuff happening. Don't turn away. Bitcoin's the greatest show on earth, and we will be here next week to cover it. See you then. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.